All right, testing, testing. Hello, everybody. Happy Saturday, happy weekend. I hope you guys had a great trading week. Kevin here with Bullish Bears. This is going to be a great webinar. This is a part two of a two-part series. Let's get strategic, as you guys see on the screen. This webinar is going to be going over how to create a trading strategy. Last week we went over a little more in depth of exactly what it is we look for, risk management, different types of strategies. This time we're going to go more in depth in the sense of actually creating these strategies. So we're going to go over scalping, we're going to go over day trading, and we're going to go over swing trading. So I hope you guys are as excited as I am. This is going to be a really great webinar. So let's get into it. I'm just going to give everybody just another minute or so to join. Appreciate you all for being here. What's going on, Kevin? What's going on, Victoria? Antonio? Hello, everybody. Appreciate you all for tuning in. I just want to make sure you guys could hear me all right. All right. Let's get into it. So, the first strategy we're going to go over, building a trading strategy part two with Bullish Bears Kevin, your favorite. No, I'm just kidding. We are going to go over scalping first. So, when we're scalping and creating a scalping strategy, it's very important to know that scalping is based off of momentum. We want to catch momentum, we want to catch strong moves. So for the time frames we use, we want to use the 1 minute to the 5 minute charts, and the max for trend confirmation, and to know if there's strength or not, I would personally use the 15 minute. That doesn't mean we're trading the 15 minute chart. I just want to make that clear, because when we use the 15 minute chart, that means we're more sort of day trading. We use the 15 minute chart to sort of get a feel for if we're stuck in a range, if we're choppy, or if we do have a strong trend at hand. Indicators and tools we might use for scalping would include moving averages. For example, would be the 5, the 9, and the 21 EMA. And guys, make sure you stick around, because I am going to go over some ThinkorSwim charts and layouts with you guys. And I'm going to be showing you guys how to use ThinkorSwim as well to really catch these momentum and catch these different types of trade strategies with ThinkorSwim. So I'll be showing you how to use the depth of market, how to use it for day trading, swing trading, and as well as scalping. Volume and VWAP are very important tools to gauge strength or to locate exits and entries as well. VWAP is a huge one, guys, because that is the volume weighted average price. So that is an indicator that isn't measured by like a moving average where it's sort of lagging. It's measured based off volume and price. So that's a really good one to use. Level 2 and time and sales is also very important when we're scalping, because when we use the level 2 and time and sales, we could see how heavy the orders are that are going through the market. And when we use time and sales, we get a feel for the flow, the order flow that is coming through the market as well. And that really helps us to know if we should be trading and scalping this market, or if we should not be taking this market at all, because maybe the time and sales might be moving a little too slow. We want a fast time and sales, because the time and sales shows the orders that have been processed through the level 2. So scalping entry criteria, we look for a short-term trend aligned with the overall trend. Now, a lot of times, as scalpers, we might want to scalp a pullback, and that's great and all, especially because we're using the smaller time frames, but it's very important that we try to trade the trend, the overall trend in general, when we're scalping as well, because then we could really ride the momentum. Because a lot of time pullbacks could be a little choppy, whereas the overall trend will give us a stronger move. Wait for a pullback or minor correction. Observe the appropriate moving averages for crossovers. Are we watching the 5? Are we watching the 9? RSI and the stochastic should be oversold or overbought, signaling a potential reversal. These are good indicators we want to use in order to really realize what's going on in the market. How can we feed off these indicators? What are these indicators telling us? Is there strength? Even the TTM squeeze is also another great indicator we could use on, say, the 5-minute chart to see if there is relative strength, or if there isn't and we should maybe sit out of this trade. confirm with volume. Increasing volume during a move does indicate strength. Again, guys, when I talk about things indicating strength or confirming strength, confirmations, I don't want just one confirmation. We want multiple confirmations, because the more confirmations we have, the higher probability that trade will be. And the better the probability, the better the trade. So we want good probability on our trades. Scalping exit criteria, we aim for a small profit target. So for example, if we're trading futures, we might aim for 2 to 5 points on ES. Whereas something like NQ, which is much larger, we might aim for 10 to 20, maybe even 30 points, because it's a much higher ATR. That's the average true range. Whereas something, if we were trading stocks options, right, and we're looking at a stock like, say, Apple, which moves about $1, $2, maybe $3, has an ATR $3, we might look for a scalp of 50 to 75 cents. Again, depends on the stock's ATR, average true range. Use a tight stop loss to manage risk, right? So if we're looking to gain 2 to 5 points on a scalp, we only really want to risk 2 to 3 points on that scalp. Now, it's not going to be a good risk reward like we would see on something like a day trade or a swing trade, where we aim to have 3 to 1, 4 to 1. But because we're scalping the momentum, we're taking multiple trades, so we're able to stop out quickly for small losses, but we're also stopping out quickly for small and fast gains. So if we have a stop loss and a target of 50 cents to 75 cents, we might want to have a stop loss of 25 cents to 50 cents. Again, making it either a 1 to 1, a 2 to 1. Regardless, we want to be going with the trend, and we want to be in and out of these trades because we're scalping. We're not day trading. And guys, just a quick thought, a quick opinion of mine is that when we're scalping, we should not turn a scalp into a day trade, right? And we should not turn a day trade into a scalp. When we're getting in the market, we need to know what kind of strategy we're using beforehand. We want to be setting our targets, setting our stop losses, setting everything. And if it's not at our stop loss or target, it's just noise. And that's sort of more geared towards day trading, because again, scalping, guys, we're in trades from anywhere from seconds to minutes. Scalping is just that. We're just scalping a little piece. We're taking a little piece of the pie. Exit if the moving averages reverse their crossover or price stalls. That's very important, guys. If price starts to stall, that means there's a good chance we're going to see a pullback, a reversal. Regardless of the situation, we don't want to be in that trade much longer because we are scalping momentum. And when momentum starts to fade and price starts to stall, we want to exit that trade because we don't want it to reverse on us. And you know what? If we exit that trade when price starts to stall, it bounces around and then it starts pushing through that level, we could re-enter the trade. That's the best part about scalping, is we're in, we take our profits, we're out. We're in when we see more momentum, we take our profits, we're out. And that's the great part about scalping. Each one of these trading strategies has their own benefits, has their own pros, has their own cons, and it all really depends on what kind of trader you feel you are and what kind of person you are. If you're somebody who's quick, somebody who's really antsy, you might be a bit more of a scalper. If you're somebody who's more patient, waiting for price to hit their target, price to hit their level, you might be more of a day trader or even a swing trader. So we want to avoid holding positions through news and major economic announcements and events. That's very important. If we have something like FOMC, if we have something like earnings, we want to be aware of that so we could stay out of that trade, because a lot of times those things will cause a high volatility in that stock. Is the crossover the price stall signal? No, the crossover, Lanny, the crossover is when price gets momentum. So if we're watching the 5 and the 9 EMA and price was sort of chopping, but then price starts to move higher and we see the 5 EMA pass across the 9 EMA, then that shows that there's strength in the market and we should take that long for a scalp. Again, guys, that's just one confirmation. I would look for multiple confirmations. I would want that to have increasing volume, increasing price, high level 2, a really good time in sales where I see prices flowing right through the market and prices being bought at higher prices. That's what I want to see. Risk management with scalping. Since scalping involves frequent trades, like I mentioned before, we have to keep our position size small. Because we're scalping, we don't want to be too heavy because it might run against us. And when we scalp, we want to be in and out. So never risk more than a set percentage of your account on each trade. We want to make sure that each trade we're risking X amount each time, because when we're risking the same amount each time per trade, then it could really start to build up in our favor. It's when we get what's the word I'm looking for? Undisciplined, and we're not disciplined enough and we're not consistent enough with how much we're risking that we could really see some losers really affect our account more than our winners are, and that's really not good for our account, and it's not good for us mentally and for us as traders. So adapt quickly to market changing conditions, cut losses quickly. Guys, a great example, for these scalps would be Friday's trading session on ES. As many of you have known or seen, if you were in our live session or in our Discord community, Friday was a very choppy morning, and although bears have been in control the whole week, we had to take note that, okay, Tuesday, Wednesday, and Thursday were huge sell-offs, great trends, really profitable, but then Friday rolls around and Friday tries to be choppy because Fridays where a lot of 0 days are on stocks and equities, and we just had a really strong trend, so the market needs that room to breathe so it could pull back, it could take some profits back. Think of it like the market is hungry because people just made a lot of money. So the market needs to make its own money back. So the next section we're going to go over is the day trading strategy. Again, guys, make sure you click that like button, like and subscribe. Make sure you stick around till the end, because at the end I'm going to be going over ThinkorSwim, how to set up these strategies, how to set up a scalp strategy, how to set up a day trading strategy, and how to set up a swing trading strategy, and what it is exactly that I'm looking for on each strategy. So for day trading strategies, the time frame I normally use would be 15 minute to the 1 hour charts and higher for trend confirmation. Now you'll see that quite frequently is that whenever I am trading, I like to look at the higher time frames to really be sure, are we making lower highs? Are we making lower lows? Are we making higher highs? Are we making higher lows? I want to know exactly what kind of market structure is going on before I get into a trade. I didn't throw in here, but I do use the 5 minute as well for my entries on day trading, because I feel like the 5 minute also gives us good signs and good clues. But when we're day trading a strong trend, it's really important to be aware of the 15 minute, because the 15 minute could also give us clues on, are we in a range, are we wicking around a lot, are we trending, are we breaking range, are we continuing trend, and so on. So volume, let's go indicators and tools. We would like to use support and resistance, supply and demand, moving averages, RSI and MACD. These are great tools and great indicators to use for day trading. Again, also TTM squeeze is a great one on the 5 minute, the 15 minute, to see where that strength is, to see where that trend is, and so on. Just like scalping, volume indicators like VWAP are very important. Also, along with a strong level 2 and time and sales, just like scalping, but we use it more in a sense of, is there high volume throughout the day? Is there consistently strong volume? Or is volume picking up every now and then dying off? It all depends on the market structure and how well the market is moving. As you can see, there are similarities between scalping strategies and day trading strategies when it comes to using specific indicators and volume. So like I'm sure you guys have noticed, I mentioned that moving averages are great for day trading, moving averages are great for scalping, and the RSI, same thing. It's great for day trading and scalping because these are the indicators that will tell us. For the RSI will tell us we're a little overbought at this level. We're a little oversold at this level. And the moving averages are sort of like training wheels if we're a little tough and a little rough on our price action reading, right? So the moving averages give us more of a sense of, okay, it looks like price has been moving lower, but the 9 and the 21 are starting to curve towards each other. Price is starting to come up, and now the 9 is now above the 21. It looks like we have a sense for a reversal here. So these are all things I look out for. These are things that I check on, and these are things that I want to be aware of when I'm day trading. Day trading entry criteria, I'd like to identify the prevailing trend on higher time frames. So even though I'm trading the 5, the 15, and the 1 hour, I want to make sure that the 4 hour is trending in my direction. I want to make sure the daily is trending in my direction. And the reason for that is the higher the time frame we're looking at for trend, the stronger the trend is and the higher the probability is of that trend to continue. Now, if we're sort of stalling out and sort of in a range on the daily, I'm going to want to play that range. If we're in a range on Apple from 171 to 177, I'm going to want to buy around 171 and I'm going to want to sell around 177. Whereas somebody who's unaware of price levels or price action or market structure might try to be buying the highs and selling the lows. That's not how we want to trade. We want to be selling the highs and buying the lows, because when we're in a range, we tend to stay in that range. And when we are in a range, there's often times where we'll break a previous low just to reverse. And what that's called in the market is a stop hunt. And we don't want to be a stop hunt. We don't want to be that liquidity. When the market does a stop hunt, what it's doing is it's drawing liquidity from retail traders, from investors, from those who are watching previous swing lows or previous swing highs that are saying, okay, I'm going to place my stop loss at the previous low. Then the market comes down, breaks that low, and what's it do? It grabs all that liquidity, and by grabbing liquidity, I mean people are hitting sell on their orders, and they're getting back out of the market. They're putting their money out of the market. They're giving their money back because they just lost on the market. And by them doing that, that's adding fuel to the fire, and that's causing us to then reverse and go back in the opposite direction. So again, we don't want to be the liquidity. We want to use the liquidity. We want to use that to our advantage. So it's always important to know what the higher time frames are doing so we could take advantage of that and know, are we in a range? Are we in a trend? How should I play this? Should I scalp it because we're in a range? Should I day trade it because we're in a trend? Or should I swing trade it because we just broke out of range? So there's many things and many aspects to trading that you have to really consider. There's never just one confirmation that's an end all to be all. There's always multiple aspects. What's the risk reward? What's the type of market we're in, range or trend? What are the indicators telling us? What is the volume and level 2 telling us in time and sales? And these are all things we want to look out for. So also, again, day trading, we want to confirm with moving average crossovers or bounces. If we're in a strong uptrending market, we might want to use the 9 EMA. And a lot of you might already know of this trend, this trading strategy, but it's called Ride the 9. We teach that over in Bullish Bears. If you are a member, you just go to bullishbears.com, you sign in, and under the, I believe it's under the Gold Nuggets or the Next Level Library, where we have the Ride the 9 strategy. And what that basically means is when the market starts to trend in an upward trend or a downward trend, we don't get in right away because we want to wait for that pullback. And when we get that pullback to the 9 EMA, that's when we look to enter our trade and we place our stop at a previous swing low or a previous swing high, depending on trend. So identify the prevailing trend of the trades, wait for price to pull back to a key support level in an uptrend or a resistance level in a downtrend. Look for reversal signals such as a candlestick pattern or RSI and MACD divergences. That's also very important, guys, and can be used as a trading, not strategy, but confirmation. If we are making a higher low on, let's say Microsoft, I don't want to keep referring to Apple, but let's say we're looking at Microsoft and it's going up, down, up, and it just made that higher low. What we're going to look for is for the MACD to also create that higher low. If the MACD fails that higher low and is making an equal low or a lower low, that's divergence, and we have to be careful for a reversal. Confirm with moving average crossovers or bounces. We could also use the Fibonacci retracement tools to find potential entry zones as well. And guys, don't forget, those of you who are members, I post these slides in our community, so you could always go back and take a look at the notes as well. And don't forget, guys, make sure you stick around, because I am going to go over some ThinkorSwim tips, tricks, and we're going to actually build some strategies today later in this webinar. Day trading exit criteria, set profit targets based on the next significant support and resistance level, right? So we always, when we're day trading, prior to getting in that trade, we want to know where we're stopping out and we want to know where we're taking profit. So day trading varies from scalping in the sense that we want to make our trading plan before the market opens and before price gets to our levels, so we're aware of how much we're going to potentially lose if the market doesn't do what we're expecting it to do, or how much we're going to gain when the market does what we're expecting it to do as well. So we could use trailing stops to lock in profits as price moves favorably, or we could also scale out of some contracts if we're trading multiple contracts too. Because when we do lock in and we sell out of some contracts, if we're selling into strength and we're trading options, that's really going to move in our favor, because as you guys may know, with options, there's a lot of Greeks and a lot of different aspects, right? So there's theta decay, there is the delta, there's the gamma, vega, all these different things that once the stock starts moving in the opposite direction, it really has a strong impact on your options. So it's good to exit out into strength when we're approaching a key level or a support and resistance level. So exit if price shows signs of reversal against your trade. Again, that signs we would look for would be something like level 2 getting weak, there being a strong level on the level 2 that it doesn't look like it's going to break, and I'll show you guys an example of that as well. I have I actually recorded from Friday a level on ES that I saw on level 2 was very heavy. It had like 200 and something orders that the market was having trouble breaking above, so that's something we would look for. And just like scalping, we want to avoid holding positions through news and major economic events. We don't want to be in during those events because a lot of times they bring extra volatility, and that volatility could swing against us and really cause a tough loss. And sometimes if we're trading options and it goes against us, it might blow through our stop loss and it might not trigger correctly because of how volatile it is, and we could take a larger loss than expected. Risk management for day trading. Determine position size based on the distance to your stop loss. So if we're getting in a trade and we have a delta of 40 and we have a $1 stop loss and a $2 take profit, that means we're risking $40 to make $80. But when we do get past that first dollar mark, we have to know that gamma is going to impact our contract. So what gamma does, and I'll cover this in a just a regular YouTube video as well. What gamma does is it impacts the delta. So if it moves $1 in our favor and we have 40 at the delta, there could be 5 at the gamma. So the first dollar move will give us $40 in profit, whereas the second dollar move will give us $45 in profit. Just an example, it always varies. Keep stop losses outside of supply and demand zones. Keep stop losses near support and resistance. We want to know where our stop losses are, and we want to make sure if we're trading options, if we're trading futures, that we're not going too heavy in size, that if it hits our stop loss or if it pulls back against us and goes near our stop loss, we're not frustrated, we're not sweating, we're not upset, disappointed. If it goes to our stop loss and stops us out, then that's it. We took a losing trade. It happens to everyone. Every trader, professional, newbie, especially professionals, guys. Professionals take losses, but they know how much they're risking and they know how much their winners get them as well. So when they take these trades, they're not sweating, they're not nervous. They get in and they get out at their stop loss or their take profit, period. Everything in between is just noise. So the next section we're going to cover some swing trading strategies. Now, swing trading does vary a little different from day trading and scalping in the sense that we are holding it for sometimes 2 days, 3 days, sometimes even a week, right? So it really depends on how strong the trend is and what our trading plan is on that trade. Alright guys, don't forget, hit that like button. I do appreciate it. I do put a lot of time and effort into these webinars for you guys, and we do this every week. Next week, I'm going to try to see if Jeremy could hop on, Bullish Bears Jeremy could hop on for a webinar, and he's going to do an advanced options webinar where he's going to cover his types of trading strategies, like the butterfly strategy, like the wheel strategy. What else does he do? Just like option spreads and stuff like that. Whereas I'm more of a price action futures trader. I do trade some options on equities as well, but I don't normally do types of spreads like he does, which is really great that we have multiple people in our Discord community that know different types of strategies. So swing trading strategies. I did write 2 hour. I meant to change that earlier to sort of set it to 1 hour. But we do want to be aware of what time frames we're watching. We want to be watching the 1 hour to 4 hour, the daily, and higher. And the reason for that is because we're swing trading these. If we're swing trading, we don't want to be looking at the 5 minute, the 15 minute, because what that's going to do is that's going to give us unnecessary nerves that could cause us to stop out of a trade that could be a winner, to make us enter a trade that maybe we shouldn't, to make us second guess our thoughts on the trade. We want to be watching the 1 hour and higher so we could definitely get that confirmation of trend, confirmation of direction, and so on. Indicators and tools we might use is moving averages. Now what you'll notice here is the moving averages are a bit higher on the swing trading, and that's because swing trading, those swings can be a lot stronger. So we like to watch the 50 period and the 200 period. We also like the Bollinger Bands, and we also want to be aware of the average true range on that stock or equity or ETF that we're watching, or even futures that we're watching, so we know how much to risk, how much our reward should be, and so on. RSI and MACD are also good indicators to use. Now, RSI and MACD are great on each time frame, on every type of strategy, because they give an overall just awareness of what kind of strategy are we in. Are we in an uptrend or downtrend, saying from the RSI, from the MACD? Are we near an overbought section or an oversold section from the RSI? Or, you know, a lot of times, guys, people get confused and will see RSI above 70 and think immediately, oh, we're going to reverse here. But sometimes it's good to note when we're above 70 or below 30 to know where that strength is. Because a lot of times when we get below 30 on RSI, we might continue for an extra day or two. Sometimes if we're above 70 on RSI, we might continue for a day or two, or 3 or 4. The market does not care about these indicators, but these indicators give us that little extra help, that little extra oomph, that little extra. It's sort of, I like to see indicators as training wheels, right? So they help us, they help guide us, they help make sure we don't fall down. Fibonacci retracement tools and levels as well for identifying potential support and resistance zones is also very important too. And it's always important to be aware of any earnings or potential news catalysts that can affect the stock that we are trading. So again, guys, just like we want to be aware of day trading and scalping, we want to be aware of intraday news. Earnings happens after hours, which is either when the market closes after 4, or sometimes we get earnings in the morning before 9:30 bell. So we want to be aware of these things on whatever stock we're watching. If we're watching Apple and we're looking to swing trade Apple, did it have earnings recently? When are its earnings? If it's not near its earnings, it's okay. Take that trade, go for it. If it is near its earnings, you got to be a little skeptical, you got to be a little careful, but it's all about price action. So swing trading entry criteria, we want to identify the prevailing trend on higher time frames, just like we do for scalping and day trading. We always want to be aware of the higher time frames. Look for price retracements to significant support levels in uptrends or resistance levels and downtrends, just like day trading, except we're doing it on a higher time frame. Observe reversal signals like candlestick patterns or RSI MACD divergences like I mentioned before, and confirm with moving average crossovers or bounces. And again, we could apply the Fibonacci tools and levels so we could have good areas to target. Because let's say we're trading Meta and we don't have any good price levels. Or let's say a better example would be Nvidia, right? Now, Nvidia's at all-time highs lately, so we might not have key levels at these certain levels. So what we could do is we could throw the Fibonacci tool on the overall trend, and that will give us those significant levels to keep an eye on. So swing trading exit criteria, we want to establish profit targets based on the significance of support and resistance levels. We want to employ trailing stops to safeguard profits during favorable price movements. Now guys, we have to be careful with our price stops and with trailing stops with swing trading, and that's because a lot of times, and I say down here, we have to be careful because of gaps in the market, right? So there might be a gap on Apple where if we're trading it to the downside, it might gap up $1. And what that's going to do when the market opens is it's really going to have a bad effect on our option. So it's always good to make sure whatever option you're buying for a swing trade, I don't want to say you're okay with losing it all. God forbid it does go against you. But we want to be okay with losing a majority of it in case it does go against you. But we have to remember, with that being said, when we swing trade, we're really aiming for high profits, high returns on investments. Just like you guys saw with our meta trade this week. Got in at $1.40 a contract, and on Friday it opened at $20 a contract. That's $140 per contract. And it opened Friday at $2,000 a contract. That's mind-blowing. And the stock market is where we get those types of opportunities. Risk management with swing trading, we want to determine position size according to the gap to your stop loss. We want to place stop losses outside of support and resistance levels because, again, a lot of times the market likes to break previous swing highs or previous swing lows and then reverse because the market knows where the majority of people are placing their stop losses at. Never risk more than a predetermined percentage of your account on each trade. If you're starting with $1,000 account, you don't want to be getting in a $900 trade because that's how you blow accounts, and that's not what we want to do as traders. We want to slowly grow our account because trading is one of the most compoundable jobs in the world. What we could do with one contract, we could do with 10 contracts. It all depends on size and consistency. So unlike day trading and scalping, we hold swing trades overnight. That's after market is closed. So we do have to be very smart with our position size because the market can have a gap or pullback to the other direction before continuing trend. So we have to be ready. We have to be aware of that. We have to know and be okay in our stomachs because a lot of people will tell me, oh, well, I was going to take this trade and then I was really antsy in it and I had to stop out. But then it continued. What do I do for that? Well, what you could do for that is you could start by sizing down. If you're in a trade and you're super nervous about it, there's a good chance it's because you went too heavy in size on that trade. All right, guys. So that's it for the slides portion. Now we're gonna go head over to ThinkorSwim, and I'm gonna cover how to build these strategies on ThinkorSwim as well. Guys, don't forget, hit that like and subscribe button again. Do appreciate you guys for tuning into these. Let's see if we could pull over. There we go. Cool stuff. That was smooth. But I do have the camera over here, so I'm actually going to pull us back over here for a moment and just drag that over. Alright, so the first thing we're going to do is we're going to create a scalp strategy. And what I'm going to actually do is I am going to get rid of everything except for the one chart, because you can't get rid of the last chart. And we're going to start from scratch. So the first thing I'm going to want to do on a scalping strategy for a scalping window is I'm going to use the flexible grid. I'm going to want to make sure there's a little number connected to it, whether you do 1 through 9 on ThinkorSwim. And I'm going to want the 5-minute chart, and you're going to want to click this little button over here, scroll down to the customize grid, and you're going to click that and make sure that you have this little box right here. What you're going to do from there is it lets you add charts to the screen. So we're going to add one chart to the right, and we're going to connect it to the same number as this one. So Apple is Apple, Microsoft would be Microsoft, and so on, right? So now it always changes depending on what we're looking at. The next thing I'm going to want to do is make sure the sidebar is clicked on for the second chart, so I could add my time and sales and level 2. Now, you'll see that level 2 and time and sales aren't moving right now, and the reason for that is because the market is closed. So what I would look for is I would make this a 3-minute or a 1-minute. Again, I personally like the 3-minute if I'm scalping, so I have the 5-minute and 3-minute both at hand. And what I'm going to do as well is I'm going to add one more chart. So you see how this little button is a square with a plus to the right. This button is a square with a plus on the bottom. So that's going to add a chart on the bottom. Now what we're going to do is we're going to want to fill this as an option. So there's a few ways you could do this. We could link it to a number. And what we could do is, let's say we link it to number 9. And we change it to just like 1 minute for now, or we could even do, let's do 5-minute. And what we're going to want to do is we're going to want to go to trade, and we're going to want to click one of these over here. So let's say we want Apple contract, so we look up Apple, and we're going to want to look at the weeklies. So because it's Saturday, the only weeklies we see will be this coming Friday. So let's pick a contract. Let's say we want to look at the 175 contract. We're going to right click it, and then you could come down and you could send to, we're going to send to 9. Now we're going to come back to our charts, and we're going to see that our options contract is now set in this chart. Next thing we're going to want to do is we're going to hit the AT, which is the active trader window. And we're going to get rid of the chart itself because we don't really need the chart on the options. We just need the active trader so we could buy our limit and sell our limit as well. What you could do with the active trader is you could also look at time and sales, because when market is open, this will print for you when people are buying and selling the contract, so you can know if there's a lot of volume in the contract or not. So let's get into more of, the strategy itself. I know a lot of you joined to learn the certain type of strategy or two. So let's look for a good trend day. This is a good example. Let's see what else we got. This is a good example. Let's go with, let's see. This one's a little choppy. Let's go with this one right here. This is, now if you look at the top right, it gives you the date. So it says 8:15. Now I could line up with this chart. This is 8:16, this is 8:15. So we're going to zoom out, we're going to zoom in, and what we're going to do is we're going to get rid of these little boxes. We're going to come back up here, and we're going to click the customize grid button one more time. Now we have clean charts, and we could sort of start fresh. Can you minimize? Yes, I can. Absolutely. There we go. Little me. Mini me. So what we would look for is, right, is we would add some indicators to these charts. Now, what kind of indicators do you guys like to use when you're trading? So I know I would personally look for something like a volume indicator. So I would go to edit studies, and I have a few good buying and selling indicators. What I like to use is the volume cloud indicator, right? Now this is not a pre-built ThinkorSwim indicator, so I'm not too sure I want to use it, but I will show you guys just as an example how it does work. And if anybody is interested, I'll leave it in the comment section below. What that does is it gives us a nice little cloud that shows us where the selling pressure is, or if we have buying pressure. When the cloud is very green, more green than red, we have stronger buying pressure. When the cloud is more red than green, we have stronger selling pressure. Another indicator we could look to use would be the TTM squeeze. That's another one that is actually pre-built in ThinkorSwim. So we would add that, and that goes to lower. You want to make sure you have your settings on right, and you hit apply. Now what that's going to do is that's going to give us this indicator down here that suggests when we're squeezing, when we have strength, when we have weakness, and so on. So by using multiple indicators, it gives us multiple confirmations. So a price action that I like to use when I'm trading with the community is called a drop base drop, or a rally base rally. And what I'm looking for there is this type of candlestick pattern. I'm looking for a drop, then I'm looking for a base, which would be this green candle, then I'd look for a drop afterwards. So we don't know when we're trading, we don't know that the stock is going to continue in our favor. So at this point, what I would look for is I wouldn't get in as soon as I see it drop, because when I see it drop like this, all this is telling me is there's a chance we stay in range. I don't know if it's going to continue. So what I would wait for is that confirmation. We get a second drop, we get a pullback. This would be our basing candle, and I would wait for the candle to close to enter. So then what I would do is I would enter right here at the candle open on the next candle, and I would target, say, a whole key psychological number, so 178. So I would be making about 65 cents on this trade, and I would be risking about 25 cents. So this is a good 2-to-1 risk to reward on this trade. Then we sort of let it play out. What happens? We get another drop candle, another drop, and another drop, smashing our take profit level. Great trade, very good stuff. And we could even use the 3-minute as confirmation as well. So let's use some moving averages on the 3-minute, right? So let's look up exponential moving average. So moving average exponential right here. We're going to double click it. We're going to click it twice so we get 2 of them. The first one we're going to keep as the 9, and we're going to make sure it's green. And the second one we're going to make it the 21. So you would go over to length, you would do 21, and we're going to change the color to red so we know which moving average is which. So now we would apply that, and now we have our moving averages on the 3-minute chart. So what do we get right over here on this pullback on the 5-minute? Well, on this pullback on the 5-minute, we also have the 3-minute pulling back to both moving averages. It pulled back to the 21 and the 9, and what it do there? It reversed there. So now we have multiple confirmations on this trade. We have the moving average rejection on the 3-minute, we have the drop, the base on the 5-minute, we have a lot of selling pressure on the volume, and we also have the TTM squeeze is starting to go lower. So we have multiple confirmations. This is a higher probability trade that we could look to take puts on Apple. So that's sort of a basic on how we would create these trading strategies for a scalping strategy. And then what you would do to save this, guys, is you would come down to save flexible grid as, then this little tool would pop up, and you would click save on that. And then what that's going to do is it's going to save it exactly like this. Another cool trick, guys, on ThinkorSwim to get options really quickly is you click this little symbol table button and you come over to options and you're going to enter symbol, and again, let's say Apple, so we're going to want to do Apple. You're going to search it. It's going to give you a quick little rundown, and you could add more strikes, and then you just click whichever strike you would want to trade. So let's say we want the 170 strike, we would click that, and now we have the 170 strike preloaded into our ThinkorSwim. The next thing we're going to do, guys, we're going to go over creating a day trading strategy. Now, for the day trading strategy, we would want this. Now, I'm not going to delete all the charts again because it is similar. It's a similar layout to the scalp strategy, except now we're using higher time frames. Instead of the 5-minute being here, we have the 5-minute here. Instead of the 3-minute here, it's the 5-minute, and instead of the 5-minute here, it's the 15-minute. And again, this chart, I would use this chart specifically to go in between different time frames to get more of a feel for the trend. So I would see, okay, well, it looks like we're creating a bunch of lower highs, lower highs, lower highs, lower highs. We're in a downtrend, but I would also acknowledge once we kept getting over to this area right here, this 177.30, we kept rejecting. Now, why are we rejecting there? It's working as a floor. It's working as support. Look, we made a lower low, and we bounced up higher. We made a lower low, we bounced up higher. Then I'm waiting, I'm selling the highs, I'm buying the lows, I'm staying patient, and I am not targeting new highs. And the reason I'm not targeting new highs is because we keep making lower highs, so that would be an unethical target. I would want to scalp it when it made these lower highs because we kept rejecting this key level. So based off of that, I would use the 30-minute and look for some time frames, some zones. And another trick I use, guys, so whenever thank you, I'm sorry, guys, the comment threw me off. Kevin will good with the man bun in his hair. It's funny, Silver, I usually do have the man bun going on. Today I'm letting it go nice and breezy. Got my Head and Shoulders commercial coming up. No, I'm just kidding. But so a cool trick that I use when I'm trading equities, guys, and the reason I do this trick is because when there's pre-market or after hours, there's no real market participants going on. So what I do is I'll go to settings and I'll go to the equity section, and I'm going to come down here where it says time and it's under axis and it says show extended trading hours. I'm going to click that off. But what I'm also going to do is I'm going to click this little display this setting on the style menu. I'm going to click this button because what that's going to do when I hit apply, now we don't have the extended hours on anymore. But what that does is now I could go right to style and it's right here, so I could click it on and off super easily. So if I want to see pre-market levels, I just click it on. If I don't want to see pre-market levels, I just click it off. So I'm looking at the 30-minute, and because I can't scroll back anymore because I'm only on the 10-day, I would come over to time frames and I would change the time intervals and I would make it say 90 days. So now I would have a better look, and you guys could even see how I found that price level. I found that price level because if we look in the past, this worked as a strong area in the past, and a lot of times the stock market is going to respect levels that it has respected in the past. It will respect those levels again. So it's so important to be aware of where a price was, what price was doing at these levels. So I had that predetermined level, and then what did stock do? The stock respected these levels, and we were able to really take some good trades off of those. So let's see. So let's go back to the 15-minute, and let's sort of break down and make a good trading strategy, guys. So let's see. So let's add some indicators. Maybe we'll look for, I would use the MACD on the 5-minute. And the reason for that is because the MACD likes to move a lot and will sometimes give false signals. So I'll use the MACD on the 5-minute so I get quicker responses from the MACD. And I would use the RSI on the 15-minute. So I would go to settings, edit studies, and I would do RSI. There's a whole bunch that show up, but we're just going to use the basic RSI. Hit OK. Now, settings on RSI will vary. I'm going to restore to factory default for you guys. Factory default, the length is usually on 14, overbought is 70, oversold is 30. Sometimes what I like to do is I like to set the oversold to 20 and the overbought to 80, just to get a little more precise. What I also like to do is I like to set the length down to 10, and what that's going to do is it's going to give me faster signals, right? So it's going to be a lot quicker. So I'm going to hit OK, hit apply, and now we have our RSI down here. So I'm going to keep an eye on the RSI, I'm going to keep an eye on the MACD, and I'm going to take a look, and let's turn our extended hours back on, and let's look for a good setup where the MACD is going higher while the RSI was at an oversold level, right? So if I see oversold over here, then we had some pullback. Now let's see how that is on the 5-minute. The 5-minute, look, the MACD started to push higher right over here, and that would have helped us to enter this trade long, although the market was choppy. So it's always good to be aware of the market structure. You know, if we're trading Apple, if we're trading Microsoft, Meta, Tesla, Nvidia, we want to know what ES and NQ are doing, and vice versa. If I'm trading ES and NQ, I want to know what Apple, Microsoft, and Nvidia and all those stocks are doing, and the reason for that is because they're heavily weighted in those indexes. So that would have been a buy signal because the RSI pushed higher on the 5-minute, and the MACD pushed higher on the 5-minute, while the RSI was oversold on the 15-minute. Another signal we got was right over here. Now this we would have only seen if we had our pre-market data on. If we didn't have pre-market data on, we still would have seen it though, just so you guys know, right? We would have seen it when the market opened that we were oversold there. Now how does the 5-minute look at that point? Well, the 5-minute, the MACD already crossed over pre-market. So we would have known, okay, there's there's one confirmation of the MACD, there's two confirmations of the RSI. Now if you use something like supply and demand as well, there was a 195-minute demand zone, and the reason I use the 195-minute time frame on equities is because that's half of a trading day. So a trading day consists of 6.5 hours. The 195-minute is 3 hours and 15 minutes. So what happened? We got a wick. And if you look at this candle's low, which it says right up here, the low of this candle was 171.70, which means it wicked exactly into this demand zone. But this was pre-market. This is before the market opened. So now we have 3 confirmations on this trade to go higher. So now we would take some long positions when the market opens. We would have our stop loss either at the key level or at the demand zone itself, and we would target maybe a key level or a key psychological level, so a 173, a 174. And what that does is it gives us a good risk to reward. We're entering when the market opens. Our stop loss is at the market lows, which would be about 56 cents. And our target would be a key psychological level, whether it's 173, which is 72 cents, 174, which is $1.75. We are getting a good risk to reward on that trade. So again, that's a great trading setup, that's a great trading strategy that we would want to use and be wary of. Again, also want to be aware of the supply and demand, want to be aware of volume, and a good way to keep track if we have healthy volume that day or not is to really zoom out with the pre-market off, and we want to take a look at when the market was opening and how strong the market was, how strong the candle's volume was. So let's go to settings on this one, go to equities, turn that on, show extended hours off. Now we could really see, okay, well it looks like this day we had a really strong spike after we wicked demand. So again, that would have been another confirmation, a strong spike in volume to take that long. But what we would also look for is after we had that spike, volume started to die out. Compared to, let's say, this day where we had a really strong sell-off, MACD was pushing lower, RSI kept on making lows, that would be a signal to go short. Guys, don't forget, I see a few of you guys just joined. Appreciate you guys for tuning in. Don't forget, hit that like and subscribe button. We do these webinars every Saturday at 6 p.m. Next Saturday, I'm actually going to try to get Jeremy to come in to do an options webinar, a more advanced options webinar, how to do butterfly strategies, how to do the wheel strategy, debit spreads, credit spreads, all that kind of stuff. So it's going to be a good one as well. If he doesn't, by any chance, I'm working on a video that's going to be going over trading lingo, and it might not be a webinar. I might just release the video as one, but it's going to go over like things like BTO, which is buy to open, STC, which is sell to close, higher highs, lower highs, what the VIX means, how I use the VIX, all that types of fun stuff. Alright, so that's it for the day trading strategy. I covered how to use this options tool to really get quick options. Now let's look into swing trading, right? And again, guys, same thing as scalping. We're going to want to link the numbers, so if we want to change what stock we're looking at, it switches just like that. Really quick, really easy. How to save it, we would come down, save flexible grid. This little chart would come up, we would hit save. So now let's go to creating a swing trading strategy. Again, this is something that I would want to use I would want to use this on the bottom right. I would want my active trader window on the bottom right for the options. I would want the left chart to be for the chart that I'm switching different time frames, and I would want the top chart to be more of the daily, right? So I would really want to get a feel for it. So what I would look for on the daily, guys, is I would look for key levels, and I would look for the market to reject. I would look for higher lows. I would look for a strong move lower. So meta, guys, was a call out, and the reason I called this out is because I saw it was weak around this 300 key level, and I also saw that it had this range right here from about 326 down to 314, had this range, broke the range, had another range, 309 to 314, bounced around, and it broke that range one more time. Now, we could have entered based off the 30 minutes demand supply zone right here, where we wicked. We would have gotten entry at 312. We, however, did not. But what I did notice was we continued making lower lows. We continued making lower highs. This is a strong trending stock that I would want to short, and that's why I mentioned it to you guys. So we got the push lower. We were moving lower with speed, with volatility, with good ATR, good average true range. We were able to grab some short positions around 300 level down here, and that was when the market opened on this day. This was a Wednesday, 8/16. Grabbed some shorts right up here. We were able to swing trade that, and the drop we got on that swing trade, guys, went from about 300 all the way down to 379. It's a $20 move on Meta. That's a huge move. Great move. That's something we really, really want to capture. Now, if you're trading stock and you're selling stock, that's going to be a 6% return. Whereas if you're trading options, that's going to be an obscure return. That's going to be, and I'll show you guys, we were looking at the 295 puts. And the reason we were looking at the 295 puts is because that was our first target when we shorted it. We were short over here, and I'll show you guys real quick the 30-minute. We were short based off of, look at the candle structure, right? We were at the bottom of this range, but we were very weak to bounce out of it, which told me there's more than likely we're going to break through it. So we did get that target the first day, but if we held it for a swing, it really moved lower. So we were looking at the 295 puts, and the option expiration was August 18th. So I'm going to punch that in. Oh, will it not give us it? What was it, the 18th? What was this Friday? Yeah, that was the 18th. And that was, let's see. So if we look at let's pull up like an hourly chart to look at the contracts, and we entered this on Wednesday around 140, around 140, 150 a contract, which is all the way down here. Now let's say we even entered at 170, right? And we got out when the market opened Friday, right? And that would have been over 1,000% return. We would have got in $140, $150 a contract and out at about $19 a contract. That's $1,900. The return on investment on that, guys, is crazy. And the reason it was so high and so great is because the push we got on the daily, we were trading the weekly options, and we were able to catch that move in a swing trade. Now, day trades, we might be able to catch a good trade on a Friday on equities because it's a 0 day, but that's if the market wants to give us a smooth trend. A swing trade like this, that's a $20 move in our direction, is huge. It does not happen often, but it happens often enough where we could start creating a strategy that it does work in our favor. So even if we were looking at the daily over here, and we saw this hammer candle, so we said, okay, well then I'll get in on this next day once we break the open. So let's scroll back on the 30-minute real quick, or let's scroll back on the hourly, right? Look at the 90, go to the hourly, and hit OK. And we are going to look at this daily over here, right? So we saw that we were looking at the daily candle, and we saw that it closed right here, it opened right here, but we know that demand zones are formed when we get candle structure just like that. I'm going to move that down so you could see. We want a nice long wick, and then we want a rally afterwards. So because the market closed like that, we could say, okay, well then when the next day closes, or not even closes, when the next day pushes above that, I'm going to want to take it long. We could have entered contracts here, or we could have even entered contracts on the retest, which we got right there. And then we could have targeted some key levels, could have swung it to the next day, and if we swung it to the next day, we got a gap up into our direction, then we could have targeted then the next key level. Now what we have is its entry at 295.63, a target at 314. That's going to be another $19 move in our direction from a, what was this? This was a Tuesday? This was a 710 was a Monday. Right, so we swung this from, right, so we would have entered on the Tuesday. We would have swung it and got out once we hit our final price target on Wednesday. So it would have been a 2-day swing. Normally for me, guys, if I'm swing trading, that's sort of what I'm looking for. I'm looking for a good 2 or 3 days that go in my direction so I could really, really get a good return on investment on those trades. But I don't look for just any trade, because let's say I wanted to short up here and wanted to target this key level. Well, we chopped around for a while, then we reversed. This trade would have ended up really failing on us. So we want good candle structure, we want good market structure. We would have known that, okay, this is a good candle, along with the market being green overall. We've been in an uptrend, we just broke this range, we just not even broke this range. We broke this range, then retested it on this candle. So now again, guys, without using indicators, we're getting multiple confirmations based on price action alone. And that's how I like to do my swing trades, it's based off of price action. That's how I do most of my trades, is based off of price action. Level 2, time and sales, these are all great tools that I like to use to really catch those trends, to really see where the momentum and the strength is. Alright, so what I'm going to do before I wrap it up, and if you guys got any questions, let me know. I'm going to show you guys this little quick clip, quick clip on how the level 2 was reacting on, this was Friday. Alright, so let's get into it. I was seeing that there was a strong price level at this 43.80 level. There was about 245 orders, and I'm watching the level 2, and when I'm watching the level 2 and I'm trying to scalp, I want to see price sell and price go and be bought at these higher prices. So with ThinkorSwim, the green and the red don't specifically mean buy or sell. They just mean if it was either at the same price or higher or lower than the previous price that it was sold. So if we're looking at this, these are all red. You see how this was 4378, 4378, 43775. This is a lot of selling pressure. And I'm also keeping eye that that 4380 level was very heavy. So it's an area that the market was rejecting. Absolutely, Lanny. My pleasure. My pleasure. Yeah, this is a really great one. This is a really great webinar. Really going in depth, giving you guys some really good gold nuggets and stuff. And yeah, when I'm using a trading strategy, when I'm scalping, guys, I love to use level 2 time and sales, because when it lit up red like that, I knew that the market was most likely going to reject. When I saw that really strong level at 43.80, I knew there's a good chance the market's not going to push through that. So I could have grabbed a short position and tried to scalp it for the next minute or so, right? And again, when we're scalping, we want to be in and out with momentum. All right, guys, don't forget, guys, hit that like and subscribe button, especially that like button as well. Love putting these webinars together for you guys. Love giving you guys these tips and tricks with TradingView, with ThinkorSwim, all this types of stuff. Love putting it together for you guys, but it does take a lot of work and energy, and I do appreciate you guys for showing up. And don't forget, guys, showing up to these webinars, watching our YouTube videos, looking up tutorials, learning, taking the time to learn. I can't make you guys learn. All I could do is provide the education and content for you guys. It's up to you guys to really show up and make a difference in your trading. And trading, guys, you won't be successful overnight. It takes time. Alright, so that's it on that video. It was just sort of giving you guys an example. If you guys do have any questions, drop it in the comments. If not, make sure you hit that like and subscribe button. We go live Monday, Wednesday, Friday on YouTube for you guys. From 9:30 to about 11, we trade the market and we go live for free. But we also go live Monday through Friday for our community, and please feel free to join our community. Go to bullishbears.com. It's a really great community. We have a really great website as well where you can learn all this types of stuff. You want to see the selling pressure one more time? Sure. I'll show you one more time real quick. So again, we saw that we were coming up to this 4379 level, but we saw this high selling pressure at this 4380. See how it says 196? You'll see it go a lot higher immediately, right? So 197, now it's 245. That's a lot of sell orders sitting there. It's a lot of selling pressure sitting there. So I'm staying patient. I'm waiting. I'm even taking a scalp short, thinking that, okay, well, the market's going to reject this because the market has been pushing lower. I'm seeing a lot of selling pressure come in, and once I see that strong selling pressure, I grab my short position, look at all the selling pressure, I go short, and I try to scalp it for a point or two, and that's how I would use the time and sales, which is this right here, and the level 2 to take that trade. Alright guys, I hope you guys enjoyed this webinar as much as I enjoyed making it. I hope to see you guys on Monday. Happy trading, happy weekend, have a great day, and I'll see you guys soon. Take care and happy trading.